prices.
David Buick, market strategist at Panmure in London. Good morning and welcome. David, is it premature to assume that yields are bound to increase because the Fed looks bound to continue the bond buying?
Good morning, Bob. I think it's a brave man who really tries to set down his stall on a permanent basis. We're still waiting for the arrival of Janet Yellen. We suspect that she's going to be in the same mode as Ben Bernanke. I think the likelihood of any tapering of quantitative easing before the beginning of 2004 is pretty negligible. Therefore, obviously, in the short
2014, you mean?
I beg your pardon, sorry. Therefore, I think it's probably negligible to expect very much activity, though we have seen, quite a fall in yields up to 10 years, down from about 2.5%, down to about 2.5%, as I say, from 3%. Notwithstanding that, we are having to sort of balance quite clearly exactly what's happened to equities. We've had 49% of S&P 500 companies posting results. 68.7% have beaten expectations, which is good news. But there again, you have seen the Dow up by 18% since the beginning of the year, 23% the S&P 500, and of course the Nasdaq by 30%. The S&P.
Okay, hello and welcome in from Sunnyvale, California. I'm Mark Vierra, here to go through some technical analysis, kind of basic stuff that I put together in my trading log every week. So let's get into it. I think it's good to have a trading log. I think it's important to write things down. Memories are distorted. You think you thought what you were thinking, but when you write it down, there's no trying to say I was thinking this, and you'll find that keeping a log, investor or trader, is just, I can't emphasize the importance more of writing things down. And my log, I go through all kinds of stuff, but just want to go through a few of the more important charts that I'm looking at. Not so much the monthly here, but let's start with that. Last monthly candle we saw is poking up above this resistance line, and now this monthly candle is starting out below the resistance line. Okay, that's all. Just file that and move on to a weekly chart. And this candle here, let's go. All right, this is a star type of doji. It's closing lower than midpoint, showing indecision, and I don't think it's a good sign. Okay, this is starting me off on the path of bearishness, and I look at lots of different indicators, but I'm just going to point out some of the finer points. Okay, that's the weekly chart. Now moving on. The next chart I want to look at here is a daily chart, showing just some basic trend lines here. Now I've added to that this trend line on the highs of these peaks, breaking above that. This is what I'm calling a pivot line. So if we break below that, we can expect some further weakness. Another look at it here. This is kind of a loose pivot that I've drawn, and where they're coinciding. So where do I go? Sometimes I'll look at moving averages, and we can take a quick look at some near-term moving averages, show some landmark prices. I'm just noting here that we're seeing that they're flattening out. So, that's a lagging indicator telling us something that we should already know. But I'll look at it just for fun. Also now, before I get into volume, take a look at our basic chart patterns here. A lot of flags showing some consolidation areas. Now there's a new flag forming here, but I'm going to put more emphasis on its V-top formation. I think it's very possible to see a temporary breakout, take out some stops to the upside, and then break down. I didn't include any measurements on this flag because basically when you add from the bottom of the flag, you're just going to get back up to possible double top. we'll see how that plays out. Nothing really in new chart patterns due to the parabolic nature of the market really kind of rules out looking at too many interesting patterns. So a lot of targets and patterns have been taken out. Let's move down in here into volume. A lot of interesting things going on in daily volume. Here, this is giving me a picture of the parabolic leg that we've been making, and also from the other daily chart, this sort of poking up above this resistance, and now no support from that. Boy, I look like a rectangle. No support from that, and it's now a firm type of resistance is what I'm saying. I'm noting the not a lot of volume, okay, but enough to compare to these previous areas of volume to say I think that looks like institutional interest, and now it's my job to find out, okay, what are institutions doing? All right, I'm coupling that with the fact that we're breaking down below this pivot and its resistance, and there's upthrust. I'm seeing signs that this could be climax. Not a lot, but the bearish volume is increasing. Increasing. So also noting that MACD looks like it's rolling over. I'm turning more bearish into this week, more or less because of volume. And our volume nodes make typical D-type formations, like the letter D. And the structure here isn't well defined. So I could like to see some more of these volume nodes. Price breaking down, building up volume and building more of a structure volume-wise. And I should probably add that this is volume by price, in case you're not understanding this chart. Let me just go through. I have a simple oscillator right here, RSI, your typical two-line oscillating moving average. MACD is very popular. This is kind of a volume spread analysis for dummies. Better volume gives me a color coding. It's a good indication of volume. This is volume by time, and this is volume by price. Just thought I'd throw that out there in case you don't get what I'm looking at here. Now a quick look at the hourly time frame is confirming what I'm looking at on the daily. You can see it on a larger kind of scale here, all this upthrust action going on. We're closing higher into the end of the session for the week. But also, for starting out the month, it's just giving me a weak idea of what institutions are looking at picking up into this. These high prices just don't seem attractive, I think, is what's going on. So we'll see what happens. I am leaning bear this week. Could be completely wrong, but I think that I am seeing some bearish stuff here. So I want to wrap up volume here, take a quick look at market profile, monkey bars. And what I'm looking at, we've got a new playground developing here. And I believe that we're going to see expansion to overlap to the previous playground area. Here is our point of control. So I think the odds are going to favor some consolidation down into these lower levels. And like I said, these volume nodes, I want to see more of a D-type structure to them. That's doesn't have to be the case, but that is what I'm looking for. And I want to wrap this video up by making a few comments on what I call risk indications. You know, you have a VIX, but what I want to point out is in a declining bond market that we've seen, I should be looking at a longer term chart here to give you an idea. But falling bonds show a longer term picture of the stock market. Bonds are far more intelligent, and you'll see in any sovereign nation, fall in the bond market is a good predictor of the longer term future. And with that said, we do have a rising dollar and a falling euro. The decline in the euro is an indication that risk is scared, and or risk off is what the term is. Okay, so let's see. I think that's about all the stuff I wanted to cover. I go into more detail in my trading log, which I'm putting together right now. Finish up this video, upload it, and you can find me over here at HotStockMarket.com. It's a great place where I keep this written log. And the beauty of forums is you can upload charts, and it's just a great environment for sharing information. So that's it for this week, and I hope to see you on the board.